I'd like to start this video off by saying yes, I am a CPA, and I have been a CPA for about 6 months, and I have about 2 years of public accounting experience. I'm saying that because take everything I'm saying in this video with a grain of salt. I only did about 6 hours of research as I wanted to turn this out pretty quick. And really, at the end of the day, I was trying to answer a thought experiment of mine. And I would also like to note that I streamed the whole process on this YouTube channel. So, I don't know, tune in or don't. Enjoy the video. Now, if you haven't seen the news, basically this Aspiration Fund Advisors company declared Chapter 11 bankruptcy. And within Chapter 11 bankruptcy, you can investigate their dues. And there was one due that stood out during this company. It was the KL2 Aspire LLC. This is Kawhi Leonard's company. It is only him and his uncle that work for this company. There was a whistleblower that came out from Aspire that basically said that this company was formed. Kawhi Leonard has not done any marketing for Aspire, and this company was paying Kawhi Leonard $7 million a year to circumnavigate the salary cap to pay Kawhi Leonard $28 million more dollars. As an auditor and a basketball fan, this couldn't be more interesting to me. And I wanted to answer one question. Would I have been able to find these payments to Kawhi Leonard? So, like any good investigative journalist, my research started with Aspiration's Wikipedia page. And when I read this page, two things stood out to me. One, in August 2021, Aspiration announced that it would go public in New York Stock Exchange by merging with a special purpose acquisition company, Interprivate 3. As well, ahead of the merger, Oaktree Capital Management, who has affiliates with billionaire Steve Ballmer, committed $315 million of funding, basically just a cash infusion. A special purpose acquisitions company, also known as SPAC, is basically a shell corporation that merges private companies together to pool funds for further mergers. How they acquire these funds is by listing themselves on the stock market. As the Wikipedia page states, just kind of think of them as private equity funds for the poor man. But the big thing is that they are on the stock exchange and therefore require an audit, and therefore I should be able to find said audit. So next what I did was Google the financial statements for Aspiration, and it led me to the first link. These are the 2021 financial statements of what I believe to be a subsidiary of Aspiration, based on the talks of the merger in the first note of the financial statements. As you can see, they mention Interprivate 3 right here and merger documentation. So what I wanted to look for was who their auditor was and general balance sheet information. Now, the auditors of these financial statements are Alvarez and Associates, Inc., who gave Aspirations an unmodified opinion in 2021. Now, what an unmodified opinion means is that an auditor found nothing materially wrong with the financials of the company. One major misconception about an audit is that the goal is not to detect fraud. There's a concept called materiality, and what I'd like to explain materiality as is the do I give a shit number. Meaning, if things are off by less than materiality, I don't really give a shit. Now, the premise of materiality is that it is supposed to be a number that if a financial statement was off by, it would influence the decision of a reasonable investor. Materiality is not a standard number that is applied to every audit. For example, if I had a company that states they generate $1 million in profit, but in actuality they generate $900K, meaning those statements are off by $100K. This, as a reasonable person, would sway my decision to invest in this company. Now, let's say that same company is now generating $1.5 billion in profit, but we're still misstated by $100K. At this point, as a reasonable investor, do I really care? No, not really. It would not affect my investment. The difference between the two numbers is so small in the grand scheme of things, it would not be important. Now, if I was going to set materiality for this company, I would set it off of total assets, as this is an investing company. And what they do is invest in assets. So I would set my materiality at probably at about 5% of total assets. So let's see what that is. $475,000. That would be my give a shit number. So keep that in mind, as the Kawhi Leonard statement was off by $7 million. We would give a shit about that. So next what I did was look up Alvarez & Associates Inc., as I've never heard of them as an audit firm. And I found their PCAOB page. And the first thing that stood out to me is there's a disciplinary action in 2022. Now, I read this whole disciplinary report, and basically it states that the firm failed to properly perform quality reviews. What a quality review is, an auditor from the same firm must look at the audit report that's independent of the work that was done. This ensures that the audit was done in a fair manner. This firm failed to perform proper quality review on 2 different engagements, both of which were for companies similar to Aspiration. In one of these instances, the quality reviewer was also the preparer of a work paper that tested 82% of the company's total assets. This exception did happen in 2019, I will note. So you're thinking, wait, the financials you are looking at were for 2022. Well, this exception was found in 2022. Now, you can see that this company was auditing Aspiration since 2019. I'm not trying to indicate that the exception was with Aspiration. I'm just trying to say Aspiration was associating themselves with untrustworthy accountants. Now, I was able to pull the Form 2 from the PCAOB website for this firm, which is basically just a summary of the accounting firm. And you can see that there's only 12 accountants, and only 6 of them are CPAs. Now, if you know anything about an audit, and especially a PCAOB audit, that's not realistic to do 59 of them in 1 year with only 12 employees. Now, the reason I believe this is a subsidiary of Aspiration is purely because of the total asset number. It seems too low for some company that's going public, and the fact that I found another report under a different name from 2024. Now, after some investigation into the financial statements, I have ascertained that these were for the purpose of the merger and the establishment of Aspiration Redwood Fund, which you can see the fund's unaudited financial statements as of March 31, 2024 on the screen. Aspiration Redwood Fund, I believe, is the fund in which you can invest in on the stock market. I will not dig much deeper into the fund, mostly because it isn't where the interesting stuff is. Just know the fund isn't the one that's fronting the expenses or the liabilities. Therefore, it must be a holding company. And now my job of finding financials becomes a lot harder. After the analyzation of the financial statements of the fund, I went back to the bankruptcy documents. And I realized the bankruptcy is for a company called CTN Holdings, Inc. And this has led me to Google search their financial statements, and I was able to find something that's a gold mine. I was able to find another bankruptcy documentation that was associated with CTN, and at the bottom of it, I was able to see balance sheet information as of 4/30/2025. With this, I can work through in setting my materiality. Alright, we're doing this live. I would like to note that I'm going to use total assets. I'm going to add these total assets together. I'm going to use a materiality threshold of 5%. I would like to note that that's pretty generous. I think 5% for total assets is pretty generous. Let's see what we get. .8. Okay, that's our total assets between the two companies. It's multiplied by 5%. Did I type that in wrong? 978,482.31. I did. 13447,236.80. Yeah, that looks more right. 4.9 million. So, Kawhi Leonard's expenditure would be material to the program, meaning if I was the auditor of these financials, I would have selected it as a sample. I would like to note a few things. First of all, this was just a fun thought experiment for me. I don't know if I captured everything in this company's assets. I very well could have missed stuff. There's a lot. It's very hard to find financials for private companies, even ones going through bankruptcy. Two, it's not the auditor's job to go look at who is being paid on the financials. You get an invoice and you just write it all down. There's no responsibility to go see who's being paid. Like I said, our job is not to detect fraud, it's to detect material misstatements. 3, I don't know if there really would have been much an auditor could do to determine this. And 4, this isn't even why they're getting in trouble. This is all getting released now. The whole reason they're declaring bankruptcy is because there was a wire transaction fraud, and the CEO was doing really shady shit. And all this stuff just kind of came out after. And lastly, this doesn't prove anything that the Clippers are guilty of circumventing the salary cap. But if you watched all this, congratulations. I tricked you into an accounting lesson. All right. I'll see you later.